relative to the private sector, we're still government paid. When the 2008 crisis came about, it was very evident to financial regulators that something was very much brewing. So even before Lehman declared bankruptcy, we ran all the simulations. Would it be a liquidity crisis, a capital adequacy crisis? Is it going to be a market stability issue? We decided early on that, in our view, it will not be a solvency issue. It will be a liquidity issue. So one of the things that we did early on, if you remember, sir, the market spreads had rose to 865 basis points. So which means nobody was borrowing because interest rates had spiked. And nobody was lending because nobody wanted to let go of their liquidity. So the BSP created a dollar liquidity board. And the signal was, if you lend or borrow, we'll be there. And the proof that it actually worked was nobody used it because they started lending to each other. And the spreads went down. So today, if you take a look at CDS spreads, which is a measure of insurance risk for the sovereign, we are the lowest in Asia. When in fact, before the crisis, we were the second highest in Asia. The only other country that beats us in terms of spread at that time was Indonesia. So today, take a look at our CDS spreads, is about 92, 94 basis points. Malaysia, Thailand, Indonesia are still in the 120s, 130, 115, thereabouts. So that's a palpable saving in terms of being able to manage the flow of funds. In terms of managing cross-border issues, the Philippines has been a recipient of cross-border flows, similar to any other ASEAN country. You take a look at why, what exactly are they funding? End of story, the bottom line is because the market spread is favorable to them at the same time that there is growth. So the issue there from a pure macroeconomy is how do you manage the swap risk? And the fact that you still see capital flows coming in for this year, and you see that the dollar-peso rate has not really moved significantly one way or the other, either a strong appreciation or a strong depreciation, does seem to suggest, in our view, that the swap spread has been managed. So at the end of the day, I would think that the years of reform, of trying to put in place all the capital adequacy reforms, the reforms on the governance of the boards of the bank, the ability for us, by the way, one very clear macroprudential guideline that we put in place was, there was a point after 2009 the peso was strengthening and the fundamentals could not support it. The story there was basically people were buying dollars in Hong Kong, selling spot in Manila. So we were getting fried in our own oil. So what we did was we created a higher risk weight for non-deliverable forwards. It's now 187.5%. We're saying it's a business decision. So you can go ahead and play the game if you want to. Just you have to face the fact that there's a risk weight. And therefore, magtatabi po kayo ng capital for that. Once the non-deliverable forward risk weights were put in place, that market essentially dried up. So we believe that the fundamentals are back to where they should be in terms of capital flows. There will be challenges cross-border simply because Asia as a whole is still growing. And if you take a look at the pronouncements yesterday from the Bank of Japan, they're no longer targeting inflation or they're targeting monetary growth. They're targeting the shape of the yield curve. That's their official pronouncement. So now we have to go back to the drawing board. What does that mean in terms of peso yen? So hindi po kasi how I would wish that it's always automatic that we can measure everything and therefore we can also measure the sort of the before and after type of change. But markets are fluid and we'd like to believe that there have been enough interventions for us to have been able to avoid the difficulties that other jurisdictions, even close by. Hong Kong suffered a liquidity crunch, Thailand suffered a liquidity crunch, Singapore is slowing down. We're still growing at 7%. Inflation is low. Banks remain profitable. The market spreads are still, have not spiked. So we believe that the interventions have basically reverted back to the fundamentals.